I'm Corbett Wall with DB Auction, here with your feeder flash for Thursday, August the 11th, brought to you in part by Western Video Market, your premier video auction market for cattle on the western side of the United States. Having another big video sale coming up here on Monday and Tuesday, August the 15th and 16th. It's going to be their Cheyenne, Wyoming sale out of Little America. Now, they had their Reno sale the last time, and that kind of kicked off these mind-blowing video markets that we had this summer. Now they're coming back with their next big video of the summer here on Monday and Tuesday. Going to have some late summer and fall yearlings. Some of those will be closer up into the central part of the United States, and then have tons of fancy calves out of the western United States. Don't miss that market on Monday and Tuesday. You can find it at wvmcattle.com or go to dbauction.com. You can view and bid on that console. Help the longs, and I'm talking about your long positions in your CME live cattle futures. They're just no help for them. It seems like this whole live cattle contract is just set up for the hedgers, and we just keep moving and moving and moving that way till finally we've just about run all of our longs off. Open interest is plunging, the lowest it's been since 2015. Who would want to take a long position in your live cattle futures whenever it can't keep up with the market? Now, it was up on Wednesday, up over $1, sitting just a little over 139, but they sold cattle on Wednesday afternoon late at 148 in Iowa, 235 and a half dressed. And so we don't have any longs, and if they are longs, like your invested fund managers that are wanting to find a place to stick money there, they might dabble in it far out, but when it gets close up, they all dive out because none of them want to get delivered upon, because all the deliveries happen in the southern plains. We need, and in your northern cattle feeders are hoping for a more dynamic contract that will keep up with the specifications of an average contract of cattle up through the 5-area feeding region. We keep moving the weights up. We keep changing things to help your hedger, but we don't help your longs at all. So they're getting cattle in the southern plains. They would like to, if they took delivery on those, sell them in a more northern market, but they're working off specifications that are lower than your averages for even the southern plains, let alone your 5-area feeding region. Now, granted, there are going to be some discounts on those cattle if they don't meet the specs, but the heck of it is, the guys that are collecting the delivery on those don't want the cattle. They don't want those kind of cattle, especially in the summertime when it's hard to get them back on feed. But it's just not working. We don't have anybody that wants to stay in there and buy the contract to push it up. We've got fundamentals, I mean loaded fundamentals for this cattle market right now, yet we don't have near enough longs to prop this market up and get it up even close to what your 5-area feeding region weighted average is, which is almost 141. Now, like I said, it was up higher on Wednesday, but still sitting just over 139. Now, for your southern plains feeders, that 139 and change looks pretty good, when the best that they can probably hope for is 138 this week. Last week it was 135 to 136. We've already seen the northern plains establish their market from 144 and a half to 146 with your majors, and like I said, herd cattle traded Wednesday afternoon late as high as 148, and there was a ton of cattle that traded in the upper Midwest and the northern plains after hours for reporting. So we didn't get near all the cattle confirmed that actually traded, because they were just really getting started right around the 2 o'clock deadline to turn those sales in. But we've got to do something to help the longs out. We could also change the contract to allow longs to demand delivery at the location of their choice. Of course, we would have to do this with a freight adjustment, because freight has become such a huge player in moving cattle, with the increase of inputs, increase of fuel prices and the lack of truck availability. But still, we've got to do something to help these longs out. You know, back 20 years ago when we saw a lot of deliveries and your market kept up, that's when we had some major players in the commodity and cattle feeding business that would take delivery of those cattle. Those guys are all gone. We don't have anybody. All we have are fund management companies and just little speculators in there pushing around in the market. And you think, well, who should be taking the long? You would think that the packers would take the long position because they know they have to buy cattle in the future. So you would think they would take a long position to hedge that purchase in the future, just like your cattle feeders take the short position because they know they're going to have to sell cattle in the future. But we have so many huge corporate feeding outfits that promise all their cattle to these big four packers. They've got almost all their needs met. They control 85% of the business, and the packers just don't need to do it because they know that they've got the cattle coming. And the problem with not having any longs and the way this board is setting way back from your average market price, it just keeps a damper on the overall market for cattle. If we didn't have your live cattle August spot futures sitting at 139, no telling what your northern cattle feeders could negotiate for. I mean, they're negotiating for prices that are $8, $9 higher than that already. But if we didn't have this damper or black cloud hanging over your finished cattle market, likely they could push even farther than that. And then your Southern Plains guys would be able to do that too. But it's absolutely pushing out all of the few independent cattle feeders that are feeding cattle in the Southern Plains and the few guys that are feeding cattle for other people, your custom cattle feeders down there that are trying to negotiate for a price in the Southern Plains. They don't have a basis to work with. You guys in the Northern Plains selling cattle at 148, well, that's an $8 or $9 basis that they get to work with. Not only are they selling their cattle at a profit, they're also collecting a nice basis there to push them further in to the black. But it's not good for the industry as a whole, and it's just keeping a damper on our market, which causes most people to disbelieve that we're going to hit the prices that we need for these light supplies that are coming down the road, for these high feeder cattle that they're buying because they know that the cattle numbers are down. But it's really a problem. We need to plead with CME to change that contract because it is broken. It's absolutely broken, and it's not working well to preserve our cattle feeding industry. So we need to do that. We need the CFTC, the Commodity Futures Trading Corporation, that kind of polices or oversees the CME trade there. We need them to recognize what's going on and come in there and make some changes, and we need the changes now because we're just trading with a futures market that is not keeping up with the market. It is nowhere near what our weighted averages are in our 5-area feeding region, and it's not a good tool to offset your risk in the market. Let's talk about your board. Your average or your August live cattle futures up $1.22 at 139.20. Like I said, that was pretty good. That we gained a little ground in there, but it's still setting, a far cry from what your weighted average is, and a mile back from where we're trading cattle already this week in the Northern Plains, and likely it's not going to be able to hold higher levels or even the levels that we've achieved already because we didn't have any deliveries tendered in the Southern Plains on Wednesday. We probably will on Thursday, and deliveries on the market pressure the market. It runs the last few longs off, and it's going to cause our live cattle futures to plunge. And that's what I keep saying is it looks like a mirage out there. You see a price out there you think's pretty good, but when all the longs start bailing out because the delivery process is not fair to them, then it evaporates immediately. If we could keep some longs in there, let them use the contract to achieve some cattle, maybe we could see your spot futures and your live cattle gain ground as your market's gaining ground, and it would kind of come to the market, but it's just not working right. October live cattle futures up $1.30 at 144.47. Your back months on live cattle were all up from 57 cents to $1.17. Feeder cattle futures continue to run at a huge premium to the already inflated cash price. August feeder cattle up $1.87 at 180.67, where we have our cash index levels, and we're in the spot month. We're well into August, sitting at 176.5, and we're trading, $4 higher than that, which is great. I mean, it keeps pulling your market along. But how can you make those cattle pencil with our live cattle futures? They just won't pencil at those levels. September up $2.50 at 185. That looks awfully good out there. Next month, your back months all higher from $1.22 to up $1.60. Corn was up 4.5, so that does bode well for your cattle futures, because they gained ground in the face of higher corn, but up 4.5 at 6.18.5 cents a bushel, and that's for your December new crop corn. Beans, November new crop down a penny at 14.27 cents a bushel. Like I said, your fat cattle trade was active in the northern plains, where those guys negotiate for higher prices, and the market is going to be higher this week. It's definitely higher in your northern plains. Your weighted average is going to be higher. Who knows what the southern plains is going to do? It's just a crapshoot. But Iowa confirmed sales of 6,600, and like I said, I heard of a lot more cattle trade after the 2 o'clock deadline to turn those sales in for confirmed sales. But live sales that were confirmed from 144.5 to 146, that sure steadied to $2 higher, and it was higher than that after hours. Dress market also steadied to $2 higher from 227 to 232, but I heard of cattle trading at 235.5. Nebraska 6,600 also confirmed sales on Wednesday from 143 to 146 live, 228 to 232 on a dress basis. So you see this active, negotiated, robust market going on in the northern plains. Of course, Colorado confidential. We don't know what happened over there. You get down in the southern plains, nothing. Kansas, 200 head confirmed, few at 139, a few at 228. And that was in the northern part of Kansas. Those cattle will be going to Nebraska or Iowa plants to harvest there. So that's not your southern plains market yet. We have yet to establish that. Like I said, 138 is probably the best that they can hope for. Perhaps 139 if your live cattle board opens quite a bit higher on Thursday morning here. But Texas, no confirmed sales at all. Haven't sold a hoof in Texas yet. We don't have a clue what can happen, but people are tendering for delivery. They didn't on Wednesday, but they had earlier in the week, and those cattle end up being reclaimed at $1 or a $2 discount there. And so those cattle really never end up being delivered. They pull them back off the market, but it continues to put pressure on our futures market, and we are running the longs off. Box beef cutout values were cheaper again on Wednesday. Choice cuts $263.23 down $1.50. Selects down 62 cents at $237.08. Your slaughter is keeping up pretty well. Up through Wednesday, 371,000 cattle harvested. That's just 1,000 less than last week at this point. 24,000 more than the same week a year ago. Talk about what else is going on. How about Livestock Risk Services? Those guys are your LRP specialists. And if you guys haven't looked at your LRP strike prices out in the future, for you guys that are going to background cattle on wheat, for you guys that are cow-calf producers and you're planning on selling your calves later this fall, look out there at some of those prices. They are very, very handsome. You can pay a fairly reasonable premium, and then the government will kick in from 35 to 55% of that premium to help you pay for that, to offset the risk in your cattle. and I realize we're in a bull market and everybody thinks there's never going to be another poor day, but we could have a black swan come in from out of nowhere and kill the market like it has 2 or 3 times here over the last few years. So you want to protect yourself and call Livestock Risk Services to help do that. How about your feeder cattle market? Your real-time index on DV auction late in the day on Wednesday sit at 176.52. That was up $1.65 from the end of Tuesday's trade there. So that is very current and just a penny off of your CME cash feeder cattle index, which was 176.53, the latest available, although it's about a day and a half late. Talk about your big sales on Wednesday. OKC West, El Reno, Oklahoma, 9,700 head, mostly yearlings on Wednesday. They did have a decent run of calves on Tuesday, but your yearling feeder cattle on Wednesday, feeder steers were $5 to $7 higher, feeder heifers $2 to $4 higher. Your calves were $2 to $4 higher on Tuesday. Pee-wee calves weighing in the 3s and 4s, $10 to $14 higher. I mean, everything is gangbusters right now. Look at your automated market report out of El Reno on Wednesday on the yearling sale there. You look at your best tested weights there, and there's some big numbers in them. 1,183 head of 7-weight steers, average 748 with a weighted average price on all of them of 178.56. Pretty salty. 928 head of 8-weight feeder steers, averaged 829 in El Reno with a weighted average price of 175.5. How about 677 head of 9-weight steers at El Reno, Oklahoma, that averaged 935 with a weighted average price of 165.82. Look at the best tested weight of heifers. 1,129 head of 6-weight heifers, averaged 655 with a weighted average price of 169.39. All very impressive quotes. How about winter livestock in Dodge City, Kansas? 2,400 head. You go back 2 weeks to the last best tested market there, and you see your steers, all weights there from $13 to $20 higher. And you think, can that be right? Well, go back 2 weeks. This market is $2 to $5 or more higher every week here, and 13 to 20 higher than 2 weeks ago there at Dodge City. Heifers $7 to $15 higher. Stick out sale in Dodge City on Wednesday, 69 head of 677 pound steers, bring 199 and a quarter. Had a sale in Bassett, Nebraska, and as you would think, it blew the roof off the place. I don't know how many times they're going to have to replace the roof in Bassett, Nebraska, but 3,100 head there, and they compared that market to 2 weeks ago. They had such a blowout there 2 weeks ago. Your market was just mostly unevenly steady, but my gosh, look at some of the quotes out of there on this automated market report. You see 587 head of 8-weight feeder steers, Bassett, Nebraska, in the Sandhills. They averaged 857 with a weighted average price of 189.57. Heifers, 697 head of 8-weight heifers, averaged 842 with a weighted average price of 178.78. A couple individual quotes. Cherokee Sales Company in Cherokee, Oklahoma, sold 55 head of steers, weighed 937 at 173 in western Oklahoma. That's an impressive quote for cattle weighing nearly 9.5. And your Bassett, Nebraska, Microsyn, no BS, top quotes for the day. I was kind of torn here. I had 70 head of 800 pound steers out of Bassett, bring 193. As impressive as that is, I got to go with the bigger quote that also impressed me. 146 head, 660 pound steers at 218. That's your feeder flash for Thursday.